All right, good afternoon, everyone. This is Joe Hinches with Beyond the Chart. It is Saturday, December 14th, almost the middle of the month. We're going to take a look at the stock market and some of the indicators today and see how things look here on the weekend. I guess the last time it was just one more day of trading since Thursday night, but kind of take a weekly view if we can. And actually, I need to go back to the Dow because I like to start with the Dow. So, okay, we've got 1, 2, 3 moves down. I think we have a little bit more to go based on some stuff I've seen during the middle of the day. I think we have a little bit further to go down. And we kind of started that at the end of the day. I think it was like, I don't know, the last half hour, last hour, a little bit of a downdraft. We'll see whether or not we get some follow through first thing Monday morning. But you've got the 50-day moving average as a potential support in here also. So I think we're going to get target right in here. But then we're going to get a bounce. Now, if this is going to be a down move, okay, it is going to we'll get a fourth wave that's going to be a corrective wave, but it should not go any higher than the low here, okay? Because the fourth cannot overlap one if we're going to have 5 waves. 5 waves will signify that we're in a new move to the downside, okay? Well, then we'll get 1, a 2, 3, kind of unfold like that. Now, if it doesn't happen that way, we come down like this, we bounce back up, and we go above this point, then we could purely be in an ABC corrective, and we're getting ready to move higher again. So this is kind of my little trigger point right in here that I'm watching after we make a little bit of low, a little lower low here. This is what I'm going to be watching to see if we get above this point. If we get above this point, then we need to reassess and figure out, okay, what are we doing? And of course, individual stocks are somewhat doing their own thing a little bit, but we'll have to just kind of watch. Let's take a look on a weekly basis. We've got this divergence that's in here. We've talked about this, and this has been going on now with 34, 35, 36 weeks almost. So it's pretty significant. And we got a pretty good down move this week, and we're closing below the low 1, 2, 3, 4, last 4 weeks here, 4, maybe 5. 15,761. So yeah, so 5 weeks, and actually on some of the others we're a little worse than that. Let's take a look at the where'd it go? The S&P 500. There it is. S&P 500. Somewhat similar. You've got this. Let me draw the line in here actually, if I can do this. A little bit of this neckline that I call it. It's a little clearer here, almost like a little head, shoulder pattern we're breaking out of. You're going to get a move that's going to be equal to this distance coming down in here, which would imply that you'd go below the 50-day on this. Let's take a look at the NASDAQ. The NASDAQ, again, is rolling over, but we don't have the 10 below the 20. The 20 is still somewhat up, so this has been strong. We take a look on a weekly basis. Again, it's been one of the stronger indices. You could see that this was basically a bearish engulfing bar, okay? Because the high of the week, the open of the week was higher than the close, and then we sold off and the close was below the low. So I've seen that happen before, and it doesn't, we need to get some follow through, okay? We need to have a down week to confirm what we're seeing here, because just betting on that move alone isn't going to work. That doesn't pay off very well. Okay, let's see. We'll take a look at the New York Composite. Okay, again, I've drawn this wedge in here. We're getting this rollover. Got the same dotted line type of thing that we had on the S&P. The S&P visually looks a little better than the Composite. We're down below the 50 on the New York Composite. I still think we got a realistic chance of coming down in near the 200, just like I talked about last week. Let's take a look on a weekly basis. We've got the lowest close of the last 8 weeks, I think it is. So we've closed, the close right here was 99.84, and we closed here at 99.54. So we've closed below the closing price of the last 8 weeks. So I don't know. It looks like we're starting to roll over here. Let me go back to daily. And again, watching these waves coming down is going to be absolutely key. New York Composite. Let's look at some of the indicators. Look at the VIX. We've talked about this. We continue to push up. Closed on, up here, basically close to the high for the week. And we've got the 10 above the 20. It's rounding up. Similar type action that we've seen with the other moves. Similar type action you've seen here. And as I've said before, the smallest move, even August, it got as high as 1781. June got up to a high of 18.2. So we're talking about up in this range, I think at a minimum before it stops. So that would make sense. We get a little bit more of a push down maybe on Monday, get a little bit of a rally, sideways rally. I don't know. We'll just have to see how it plays out. But high-low indicator, we got a little bounce on Friday. But, we get bounces like that in these down moves. That's not unusual. We'll just have to wait to see, does it continue to strengthen, or does it continue to go down to the downside? Let's see. I want to take a look at, I don't think I looked at the short-term trading index, the trend. Well, that's a really bad bar. Okay, let's look at this one. Really no new sign in here. What we're going to look for is either the blue line gets up around here around 1.5 or close to it, or we get several days where we get closes. At least one day we get a close above this line here, and 2 or 3 days of action, somewhat similar to kind of like back in February. Where was it? Yeah, I mean, look at February. 3 out of 4 days had highs during the day, way up above the 2 line, and then this ended up being the end of the correction here on February 25th. So, we got to watch that, and I think that's it on the indicators. Want to take a look at the ETFs, the three amigos, I'm calling them. Home builders, let's start with that. Okay, the home builders were right at this trend line. The 10's below the 20. We're right at the 50. It'll be interesting to see whether this trend line holds or whether we start to break down. Semiconductors. Semiconductors, the same thing. It's right at the trend line. Now, I really thought we had a triangle here. I thought we had nice flat top and an ascending triangle, broke out, and it looks like it's failed. Now, if we break down below here, then that'll be a real sign that it's failing, especially if we exceed the low here. Let's look at the financials. And the financials have broken the trend line. Now, they haven't pulled back down in here. To me, this is kind of a critical point. If this point doesn't hold, then we're moving to lower lows, okay? And we do have the 10 below the 20, so it bears watching these to see, especially this financials, if it's breaking down. So the last thing I want to take a look at today is I'll take another look at Apple. It's been a week since we looked at Apple. I still think that this was the top back here up around 700, that we had the first initial move down. This is a rally, in my opinion, a bear rally, an A, B, C, and then we're going to get a third move down, okay? That's my take on this, and as you look closer, I had said in a couple of the previous that we were looking at 973, and we got right up here as the high at 975. We've rolled over last 5 days. We're closing, so looking to see, do we break below this high point and then break this bar right here, this trend line. So that's what I'm looking for on Apple. And that'll do it for today. We will get back in touch tomorrow. We'll look at some individual stocks and see what kind of ideas we've got for trade ideas this coming week. Have a great rest of the day, and we'll talk to you tomorrow. Thanks for stopping by. This has been Joe for Beyond the Chart.